Brett Meyers, welcome to Startup TV.
Good to be here, thank you.
So we're here in your lovely offices in Ranelagh.
Yeah, we've been here about a year and a half. We're going to have to move soon because we just announced a funding round last week, and we're planning to hire another 50 people in the next 6 months or so. So this won't fit us after that, unfortunately.
Wow, that's quite extraordinary. So I think we met just maybe short of 3 years ago, and at that stage you were really in the early stages.
At that stage, what are we talking about? 2012. I think we were still 7 employees at that point. So yeah, now we're at 55, and we should be at 100 or so later this year.
It's quite incredible. And did you come to Ireland originally to do a startup, or did you come for other reasons?
Yeah, no, I originally came due to lack of alternatives.
Okay, because you're Australian. I probably should have added that.
I'm Australian. I spent a couple of years in London on a working holiday visa, and got to the point where I was happy to leave London. I'd kind of had enough of London, but I didn't want to go back home to Perth. So luckily, kind of at pretty much the last stage of preparing to leave, I found that I could get a visa for Ireland. So I came over intending to stay a year, and that was 15 years ago. I kind of fell in love with the place, I guess.
Wow, so that's quite a long while before CurrencyFair.
Yeah, I was here 10 years, well, 8 or 9 years anyway before CurrencyFair. So worked in a number of places. I was a programmer originally, and I did some programming jobs, and I was worked for JP Morgan in a more financial, starting with programming, moving into a financial role, and then for another company after that before starting CurrencyFair. And
am I right in understanding you had a FinTech before CurrencyFair?
I don't know if you'd call it a FinTech.
It's kind of a buzzword, isn't it?
It was a finance. I mean, it has a lot of similarities in the fact that what we did was me and my co-founder John, who's co-founder at CurrencyFair as well, left our respective banks. So this is when I left JP Morgan to set up an independent shop doing what we were doing at the bank. So taking on the banks. I'm not sure if I call it a tech. It was very much a.
What was it? A risk job?
It was basically compliance reporting and administration on structured finance deals. So all the shit that went bad in 2008, basically, and so okay. It wasn't our fault. We weren't creating these deals. We were just doing the reporting, and we thought that the way it was being done at the banks was under-resourced. There were a lot of errors. It was slow. We could do a better job on our own. So kind of the same principle with CurrencyFair, but I wouldn't really have called us a tech company back then. It was more just we thought we could take on the banks.
Okay, that makes sense. And then, so where did the tech element come in, or where did the CurrencyFair idea come from?
The idea I had a number of years ago, I'd say more than 10 years ago. I can't remember exactly when. And it evolved around my own experience of basically getting ripped off when I sent money back to Australia. After that, it happened a few times, and once I copped on to how much it really cost, how many different types of fee there were, and how some of it was hidden in the exchange rate, and then there were sending fees and receiving fees and all these people taking a bite out of your money. I got sick of it, and if I needed to go to Australia and let's say I wanted some Aussie dollars, I had an expat friend who was living in London, and I knew she always had Aussie dollars in her bank account. So what I'd do is I'd just email her and say, look, I need 3,000 Aussie dollars, can I give you some sterling? And I'd look up the rate. I'd maybe round it up slightly in her favour because she was doing me a favour, and I'd say, well, cool, you send me the 3,000 Aussie into my bank account down in Australia, and she'd do that on her online banking, didn't cost anything. I would use my UK online banking, which I still had from the time I was there, to send her the equivalent amount of sterling. And so what had happened is effectively we'd both done an international bank transfer, and it cost neither of us anything. And that concept just seemed really elegant, you know.
Yeah, it's like a peer-to-peer exchange.
Exactly, yeah. And so then I started to think, well, how could we sort of expand that out so that lots of different people could take advantage of this matching model, if you like. And at the same time, I guess, or similar earlier, I'd seen Betfair, and seen what they'd done in the gambling space, and
another peer-to-peer market for liquidity.
Exactly. Yeah. Well, they were what they did to gambling, what effectively CurrencyFair does to FX. You know, they allowed people to bet directly against each other, but in this marketplace where you choose your own odds. CurrencyFair works the same way, except it's not odds; it's your exchange rate. You choose your own exchange rate, but it has all the benefits of a marketplace. So that's really where it evolved.
And on that point then, how do you, so typically with FX, we notice there's a couple of ways of making money. The spread difference is one of them. So how does CurrencyFair make their money?
So our revenue comes from two things. One is so we host this marketplace and we charge a fee on that.
It's like a participant's membership fee? Or?
No, it's a percentage fee on the transaction. So it's, in comparison to the banks, where that percentage fee is somewhere between 3% for European banks, and it's actually over 5% with Australian banks, our fee is 0.15% when people match each other.
Okay.
And then on top of that, we provide extra liquidity if needed to that marketplace. So let's say you come along and you want to do a £2 million transaction. We will step in for any excess that's needed if there are not enough customers to match all that off. And we price that usually at around 40 basis points on euro sterling. So 40 basis points is just 0.4%. And so the net result is that the average fee paid by people on the site is about 1/3%.
Okay.
And then on top of that, the second source of revenue, which is really designed to try and cover our own costs of making the payment itself, is a flat €3 fee, or the equivalent in other currencies. So combined together, they make up our revenue.
This is very much a volume through the door business.
Exactly. I mean, our margins were, we charge on average about 1/10 of what the banks charge for this service. There are a number of reasons why we can do that. The marketplace model is very efficient. We're very efficient. We're a tech-based company, not a bank with legacy tech systems. But it does still need a lot of volume because we don't charge much of a percentage on that.
And did you have to then develop your own platform from scratch, or did you use any third-party technologies?
No, we built from scratch.
Right.
So I have a programming background.
You're a physicist, boy.
I did physics at uni, yeah,
Okay.
and electrical engineering, but I'd become a programmer just through different jobs I'd had. So I wrote all the algorithms that process orders.
Right.
So it's fairly simple, but when you get into the detail about making sure that everything matches off perfectly and
Yeah.
people get consistent results when they place orders at certain rates, it's a little more involved than it sounds. But so I wrote those algorithms, and we had an initial CTO who converted them into a website, basically.
Okay. Is there any kind of vetting? Because I'm sure you're regulated by the Irish Financial Services.
Yeah, regulated by the central bank here, and that's under a European regulation that allows us to passport throughout the European Union. We're also regulated by ASIC in Australia.
Okay. And how did the central bank feel when you turned around to them and said you're going to create your own algorithm to move money about the place? Was that a difficult thing to do in this country?
We didn't have any particular issues around the way we were doing it, because from a regulatory perspective, we are providing an international bank transfer service. I mean, if you think about it, there are a lot of brokers that do exactly what we do. They just charge a higher percentage and they don't use a marketplace model behind it. But from the I guess the flow of money perspective, they have customers. That customer sends the money in one currency, it gets sent out in another currency. So you could almost look at what we do as just a creative way of determining the exchange rate that people use by using this marketplace. But from a looking outside as a regulated perspective, we just regulate it like any other broker would be. So they didn't really have any issues with the model itself. We just had the normal issues with starting with a small company and going through an approval process, and we hit the regulator at a pretty tough time. It was late 2009, so it ended up taking, I think it was about 5 or 6 months in the end to get our regulation. But yeah, not due to issues with the model.
Just due to a generally very busy office for those guys?
They were busy. They'd just had, I guess a pretty tough time over the crisis as well. So it was hard to get enough airtime with them to get the application processed.
It's FX is quite an interesting topic at the moment. Certainly Bloomberg seems to be awash with it because the dollar is almost at parity with the euro at the moment. Is that affecting your business positively or negatively? Are more people doing transactions? Are there opportunities there?
Yeah, it's interesting. We find that so a lot of our customers are expats. So the people like me, or even retired British people, say living in France. That's a very typical case for us. They are earning a pension in pounds, but they live in euros, so they have this regular need to transfer. And what we see is that the rate really does affect the amount of the transfers, and it indicates to us that people, they are sensitive to the rate, so they'll hold off if they can. If they don't need the money, they kind of look at the rates and go, "Oh, this is lower than it's been for months. I'm going to wait and see if it comes back." So there's a real, I don't know if it's human nature or what, but there's a real, and it's not gambling either, but still people I think they want to feel like they've exchanged at the right time.
Yeah.
So they wait, and then we saw the euro weakened recently over the last few months, and we saw a lot more people jumping in, selling their sterling and buying the euros. So it is sensitive to where the rate is at the time.
You mentioned a transaction that you can cope with 2 million of a transaction, and there's a lot of startups in Ireland that are doing business internationally and in dollar terms. Mm-hmm. Are there opportunities for startups to hedge or to use a service like yours to maybe better navigate the currency markets?
Certainly. Like if any company, I think about 10 to 15% of our business does come from SMEs.
Okay.
And really, if you're a small business or even a medium-sized business, you're generally not going to get preferential rates from your banks, and small businesses will be paying about the same margins as everyday consumers do. It's not until you get big enough to have a strong banking relationship that banks consider giving you better pricing. So if you are transferring money, converting, you've got foreign invoices or you're moving money between subsidiaries or whatever it is, it's certainly worth using this because you will save money.
It's a good opportunity. And maybe a question on doing business in Ireland right now on the commercial property side. I've just come back from Sweden and Denmark, where they have some very interesting ideas to get around the fact that a lot of startups scale up, hit a certain size, and then maybe find difficulty in moving. Is that something that's affected you guys?
Yeah, I mean, like the kind of, so, this office where we are now, the offices we're looking at, they all want, 5-10 year, usually 10-year leases, and you can get a 5-year break or whatever. Whereas startups that are doing well and scaling, there's no, you either go for a massive office at the start so you've got room to move into, or you're left having to move every couple of years. So, I mean, what we'll look to do is, we're taking on a much bigger office. The next time we might see if we can sublet some of that space in the meantime. We have to look at what we're going to do with this office. Yeah. So there's, it definitely needs someone to do something about it. There's a gap there.
It's challenging. And on the venture side, you just said you raised another round. What do you think about the venture market in Ireland? We had something like 400 million spent in seed capital last year versus 100 million for Italy or Spain. They're much larger countries. Do you think, do we have too much, not enough, the right amount of VC money?
I don't know. I tend to really think about it in terms of our company. So there is, it is considered fairly easy to get seed money here. We went through, I wouldn't say it's a strange path, but it was quite a convoluted path in that we did a lot of friends and family type rounds and angel rounds, and then Frontline invested in us, who are a really great local VC here. And then the recent round was Frontline plus Octopus, a UK VC. So there's different arguments. Some would say there's too much seed money, there's too many things getting funded that shouldn't be getting funded. But and then it's hard to get the next level of funding, so you end up with this sort of point where they get starved. But I guess I believe that good companies will be able to get funded at any stage.
And from your point of view, is it a case of this money is going to help you to grow quicker, faster, or what would you be using the cash for?
Yeah, it's growth, both growth in staff, so it allows us to hire. I mean, we could take a completely different path with this business. We could pull things back a little bit, drop our marketing spend, run at a profit, start to grow revenues and then start reinvesting that. But it would be just a missed opportunity. Okay. So for us, it's about raise extra money, hire faster than we would through our own revenue, really expand our ability to deliver product, and at the same time start increasing the marketing spend as well, because this is a huge market we're in, and it's a market that is quite tough to reach in a lot of ways. You're targeting expats, you're targeting people that are living in foreign countries, and you're up against a banking system that isn't transparent about what it charges, and a lot of misinformation. Even the post office are happy to send out flyers that say commission free or whatever it is, they're 0% commission or something like that.
Yeah, they're nice spreads there.
Built into the exchange rate, right? But the fact is, a lot of people reading that believe it, and they go, this is free.
But there's a huge trust element there, that if I'm maybe a retiree and I'm used to trusting the government and the banks and the post office, and then suddenly CurrencyFair pop along, there's a lot of work to be done to really get into that sort of a market.
Trust is definitely a feature of this market, and I think trust barriers are what has protected the banks for so long. And I actually don't believe the whole FinTech revolution is necessarily about the tech side. I think it's a factor, but I actually think this is consumer-led. This is behavior change, where after the crisis, trust in banks was lowered. And that allowed people to try alternatives. And whether that was because they maybe thought, okay, my bank maybe isn't as safe as I thought it was, or alternatively, they just got so pissed off with their banks that they said, I want to do something now to feel like I'm getting one back at them. And then that meant that consumers started to move more easily. You had some successful businesses, which has then prompted more to start up. And so it's a consumer change. And so the trust barriers are still there, don't get me wrong. We work very hard to convey that we are regulated and that we are well funded and various other things. But I think it's lower than it used to be.
Yeah, I suppose some people would have said you must be mad at the financial crisis, whereas ironically you probably got a market partly as a result of the financial crisis.
Yeah, like we launched, I think, a really good time for us because there's two things. One, there's the trust issue I just talked about. I think that was lower, but also like our product saves people money. And geez, you know what Ireland was like prior to the crash. Like, I can save you 3% in your FX, and people are like, I don't care, charge me 6%. You know, it's like so a recession's a great time to launch a money-saving product.
Yeah. Well, look, Brett, thanks so much for your time, and we look forward to visiting you in your new office, twice the size, very shortly.
Yeah, please do. Great.
Good on you. Thanks very much.
No worries, mate. Cheers.
Cool.